Hey everyone, welcome back to Investing Talk Podcast. This week, we are going to be taking a look at Tyson Foods. They've been making headlines recently, and their Q1 2025 earnings report just dropped. Looks like there's some pretty interesting stuff in here for potential investors. We've got the report right here, along with some market analysis. So let's just jump right in.
Yeah, the thing that really sticks out to me is how they just demolished their earnings predictions for Q1 2025.
Oh yeah, they absolutely crushed it.
Yeah.
Adjusted earnings per share ended up at a solid $1.14. And, analysts were only predicting 88 cents. So, I mean, that's a big difference. So what does that tell us?
Well, I think it's a pretty strong signal that they're, performing really well and, it hints at a lot of potential for growth down the road. But it's not just about profit, right? I mean, Tyson Foods is also showing some really impressive signs of growth.
Yeah, you're right. I was looking at their net sales. They've jumped up by 2.3% year over year, hitting $13.62 billion, which is even better than analysts were expecting, right?
Yeah.
I think they were predicting something like 13.44 billion.
Yeah, exactly. And that kind of growth is usually driven by strong demand. We're seeing that especially in their beef and chicken segments. Sales are up by a significant 6.2%.
Wow. So this isn't just, dumb luck. There's some serious strategy at play here. I'm curious what's fueling this success.
Well, one factor is that animal feed costs have been going down, which obviously helps their bottom line. But they've also been really smart about cutting costs and becoming more efficient. You shared a report on some of their initiatives. They're clearly really serious about, squeezing the most out of every dollar.
Yeah, that makes a lot of sense. Now, what about Tyson Foods' plans for the future? They've revised their outlook for fiscal year 2025. It seems pretty optimistic.
They've bumped up their sales forecast. And now they're predicting sales to either stay flat or go up by 1%. But here's where things get really interesting. Their annual operating income forecast has been adjusted to a range of $1.9 billion to $2.3 billion.
Wow, those are some serious numbers. So do you think this means that Tyson Foods is a good investment opportunity right now?
It's definitely a company worth considering, especially if you're interested in long-term growth. They have a really strong market position, and they've been making some, really smart improvements across their different business segments.
Okay, I'm taking notes. Before we get too carried away, though, we should probably mention that there's been a change in leadership. Wes Morris is retiring from his position as group president of the poultry business. You flagged this in your notes, so I imagine it must be something to keep an eye on.
Absolutely. Anytime a major player like Morris steps down, investors are going to pay attention. It's still early, but, this shift could definitely have an impact on how the poultry segment performs in the coming months.
Yeah, for sure. Speaking of investors, how did the market react to all this good news from Tyson Foods?
Well, on February 3rd, during premarket trading, Tyson's stock ticker symbol TSN jumped up by 4%. That's a pretty clear sign that investors are feeling confident.
Yeah, it definitely seems like the market is responding well to their performance. So let's take a quick look at Tyson from a technical perspective. What's the current state of their stock?
So as you mentioned, on February 3rd, TSN opened at $57.50. That's up from the previous close of $56.78 on January 31st.
Okay, so the stock is trending upwards. How does that compare to its performance over the past year?
Well, their 52-week high is $66.87, and the low is $51.16. So the current price is sitting comfortably above its low point, but it still hasn't reached its peak. What stands out to you from the research on key indicators?
Well, I see their PE ratio is currently at 25.89, and their dividend yield is 3.30%. Are those good numbers?
I mean, the PE ratio being that high suggests that investors are pretty optimistic about Tyson's ability to grow their earnings. As for the dividend yield, that's pretty attractive, especially for income-focused investors.
Okay, interesting. So what's the overall consensus among analysts? What are they recommending?
Right now, the general consensus is a hold rating with a median price target of $56.44. However, there's quite a range of opinions out there. Some analysts have set their target as high as $70, while others are as low as $45.
Wow, that's a pretty wide spread. It sounds like there's some uncertainty about where the stock is headed next.
There is. But, with the recent earnings beat and positive guidance, there's definitely a sense of cautious optimism around Tyson Foods right now.
Cautious optimism. I like that. So what should investors be thinking about before making any decisions about Tyson Foods?
Well, it's important to remember that even though Tyson Foods is doing well right now, the stock is trading pretty close to its median price target. That means the potential for short-term gains might be limited. Like with any investment, you need to consider your own risk tolerance and how long you plan to hold the stock.
That's sound advice. Before we move on, though, I want to circle back to something that really caught my eye in the earnings report, that 6.2% sales increase in their beef and chicken segments. I'm really curious what's driving that surge in demand.
Well, one major factor is the continued growth of the global protein market. People are looking for high protein foods. And Tyson is in a great position to capitalize on that trend. They have a really strong brand and a wide distribution network, so they can reach a lot of customers.
Yeah, and they've been smart about tailoring their products to, meet those preferences.
Yeah.
You brought up a really interesting point earlier about the growing demand for antibiotic-free meat. It's no surprise that Tyson is seeing a boost in sales there. I mean, they're really listening to what consumers want. It sounds like they're in tune with consumer trends. But the food industry is so competitive. How are they staying ahead of the pack?
Well, they've been using a combination of strategic acquisitions and innovation. Like, for instance, they recently acquired Keystone Foods, which really strengthens their position in the global poultry market, especially in Asia. And they're also putting a lot of resources into research and development to come up with new products that meet evolving consumer demands.
So they're not just riding the wave, they're actively shaping their future. That's impressive. Now let's shift gears for a moment and talk about some of the broader factors that investors should consider. What other trends are shaping the food industry right now?
Well, one major trend is the rising demand for food safety and transparency. Consumers are more informed than ever these days, and they want to know where their food comes from and how it's produced. They're holding food companies accountable.
That makes sense. It's not just about the taste anymore, it's about the whole story behind the food. So how is Tyson addressing those concerns?
They've been really proactive about enhancing food safety and transparency throughout their supply chain. They've implemented stricter standards, and, they're just communicating more openly with consumers about their practices.
That's good to hear. Building trust with consumers is crucial. What about the environmental impact of the food industry? That's a big concern for a lot of people. Is Tyson doing anything to minimize their environmental footprint?
Absolutely. They've set some pretty ambitious sustainability goals, including reducing greenhouse gas emissions, conserving water, and minimizing waste. They're investing in renewable energy and exploring ways to reduce their impact on the environment.
It's great to see a major company taking those steps. So they're focused on profits, but also on responsible practices. That seems like a winning combination.
It certainly does.
Yeah.
And speaking of profits, let's circle back to their financial performance for a moment. We talked about their impressive operating income forecast. What are the key factors driving this upward revision?
You're talking about the adjustment to their annual operating income forecast, which is now projected to reach between $1.9 billion and $2.3 billion, right?
Exactly. This upward revision really shows their confidence in their ability to control costs and improve profitability.
And what are some of the strategies they're using to achieve these cost savings?
Well, they've been focusing on optimizing their supply chain, streamlining their operations, and negotiating better prices with suppliers. It's a multi-pronged approach, and it seems to be working.
Yeah. But are there any potential risks or challenges that could impact their ability to achieve these targets?
Of course, every business faces risks. One potential challenge for Tyson is the volatility of commodity prices. Fluctuations in the prices of feed ingredients like corn and soybeans can significantly impact their costs.
That makes sense. They're kind of at the mercy of those external factors.
Exactly. And they also face increasing competition from plant-based protein alternatives, which are gaining popularity among health-conscious and environmentally conscious consumers.
You're right, it's a growing trend. How is Tyson responding to this competition? Are they worried?
Actually, they're embracing it. They've launched their own line of plant-based protein products under the Raised and Rooted brand. This allows them to tap into a new market segment and cater to those evolving consumer preferences we were talking about earlier. It's smart, right? They're not ignoring the trend, they're joining it.
That's definitely a savvy move. They're showing they can adapt and stay relevant. Now let's talk about their stock performance. We mentioned that TSN jumped 4% after their earnings report was released. But how has the stock been performing over a longer period?
Over the past year, Tyson's stock has experienced some volatility, which is normal. Market conditions and industry trends can have a big impact. But this recent positive earnings report has renewed investor interest. It could be the start of a positive trend.
That makes sense. But what about the analyst's hold rating and the median price target of $56.44? Does that suggest limited upside potential?
Well, you have to remember that those analyst ratings and price targets are just one piece of the puzzle. They're based on predictions and models, which aren't always accurate.
So you're saying investors shouldn't rely solely on those recommendations?
Exactly. It's crucial to do your own research, look at all the available information, and form your own opinion. Now let's shift gears and talk about Tyson's dividend. Their current dividend yield of 3.30% is pretty attractive.
It is. It seems like a good option for investors looking for a consistent income. What can you tell me about their dividend history and policy?
Tyson has a really solid track record of paying dividends. It's clearly something they prioritize. They've consistently increased their dividend over the years, making them a popular choice for income-seeking investors.
That's reassuring. But what about the sustainability of their dividend? Can they afford to keep those payments going in the long run?
Well, based on their strong financial performance and commitment to shareholder returns, it seems likely that their dividend is sustainable. However, like with any investment, it's wise to keep an eye on their financial health and any potential risks that could impact their ability to continue paying dividends.
Okay, that's important to remember. Now, before we move on to our final thoughts on Tyson Foods, let's zoom out a bit and consider the bigger picture. What are some of the key trends and challenges shaping the entire food industry?
Well, one major trend we're seeing is a growing demand for food safety and transparency. Consumers are more aware than ever about where their food comes from and how it's produced, and they're demanding more accountability from food companies.
That makes sense. People are becoming more conscious of the impact their food choices have.
Yeah.
How is Tyson addressing these concerns?
They've implemented a number of initiatives to enhance food safety and transparency across their supply chain. They're also making an effort to communicate more openly with consumers about their practices and standards.
So they're taking steps to build trust and credibility with their customers. That's crucial in today's market.
What about the environmental impact of the food industry? That's a growing concern, and Tyson is a major player. Are they doing anything to minimize their environmental footprint?
They are. They've set some pretty ambitious goals when it comes to sustainability. This includes reducing greenhouse gas emissions, conserving water, and minimizing waste. They're investing in renewable energy sources and exploring innovative ways to lessen their environmental impact.
That's encouraging to hear. It sounds like they're taking a proactive approach to sustainability. Now let's bring it back to Tyson Foods specifically. What are some of the biggest opportunities and challenges they face in the coming years?
Well, one major opportunity for Tyson is the continued growth of the global protein market. Rising incomes and population growth in developing countries are driving an increase in demand for meat products, which puts them in a strong position.
That makes sense. Yeah, with a growing global middle class, the demand for protein is only going to increase. But what about the challenges? What obstacles do they need to overcome? Well, one challenge they face is balancing affordability with their commitment to sustainability. Producing meat in a sustainable way can be more expensive, so they're going to need to find ways to manage those costs while keeping their prices, competitive.
Yeah, it's a tough balancing act for sure. They need to keep their customers happy while also doing what's right for the planet and their bottom line. It sounds like a complex situation.
It is. They also face potential disruptions from, things like animal disease outbreaks, like something like a widespread outbreak of African swine fever. That could really mess with their supply chain and hurt their profits.
Oh, that's a good point. Disease outbreaks are a real risk in the food industry. What about the regulatory landscape? Are there any potential hurdles there?
Definitely. Governments around the world are putting stricter regulations in place when it comes to food safety and environmental protection. Tyson's going to need to stay ahead of those changes and make sure they're in compliance.
It sounds like staying informed about regulatory changes is going to be crucial for them. What about consumer trends? We've talked about the shift towards plant-based proteins. But are there any other shifts in consumer behavior that Tyson needs to be aware of?
Absolutely. Consumers are more health conscious than ever. They're looking for healthier, more convenient, and more sustainably produced food options. Tyson needs to be able to adapt to those changing preferences if they want to stay competitive.
Yeah, so it's not enough to just offer a great product anymore. They need to make sure it aligns with consumer values and lifestyles.
Exactly. It's about the whole package. Now let's talk about competition. Tyson isn't the only player in the game. Who are they up against, and how do they stand out from the crowd?
That's a good question. It seems like every company is trying to get a piece of the food market these days.
You're right. Tyson's main competitors are other big meat processing companies like JBS and Smithfield Foods, but they also face competition from, those new players in the plant-based protein market, companies like Beyond Meat and Impossible Foods.
So they're battling it out with both traditional and innovative companies. How are they making sure they stay ahead of the curve?
Well, they're leveraging their strong brand recognition and their huge distribution network. They're also putting a lot of emphasis on innovation, constantly coming up with new products and ways to meet consumer demand. And they're not afraid to invest in marketing and advertising, to make sure they're top of mind for consumers.
That's smart. They need to keep reminding consumers why they should choose Tyson over the competition. Now let's talk about their international expansion. We mentioned earlier that they're investing in new markets and building partnerships overseas. Which regions are they targeting for growth?
They're really focused on Asia, especially China. The demand for protein there is exploding, and they want to be in a position to capitalize on that growth. They're also exploring opportunities in other emerging markets like Latin America and Africa.
So they're taking a global approach to growth. They see the potential in these rapidly developing economies.
Exactly. They understand that the future of the food industry lies in global expansion.
Okay, so we've talked a lot about Tyson's strategy and the challenges they face. Let's bring it back to their financials. What key metrics should investors be paying attention to when they're evaluating the company?
Well, investors should definitely be keeping an eye on revenue growth, profitability margins, and cash flow generation. Those are all indicators of the company's financial health. They should also be looking at debt levels and how effectively the company manages its expenses.
So it's not just about looking at the big picture. It's about digging into the details and understanding how the company operates.
Exactly. A solid understanding of a company's financial performance is crucial for making smart investment decisions.
Now, before we wrap up, I want to ask you about Tyson's overall impact. They're a huge company, and their decisions have consequences that go far beyond their balance sheet. What are some of the broader societal impacts of their operations?
Well, for one, they have a huge impact on employment. They provide jobs directly through their own workforce. But they also create jobs indirectly through their suppliers and distributors. Their operations also play a significant role in ensuring food security, helping to provide a stable and reliable source of protein for people around the world.
That's a huge responsibility. What about their environmental practices? We talked about their sustainability efforts. But what's the real-world impact of those initiatives?
Well, their efforts to reduce greenhouse gas emissions and conserve water have a direct and positive impact on the environment. They're also working to improve animal welfare and promote responsible sourcing, which has ethical and social implications as well.
So they're making a conscious effort to minimize the negative impacts of their business and maximize the positive ones.
They are. They seem to be taking a holistic view of sustainability, recognizing that environmental, social, and governance factors are all interconnected.
Well, we've covered a lot of ground today, from Tyson's financial performance and growth strategy to their sustainability efforts and their broader impact on society. What are your final thoughts on the company and its future prospects?
Overall, I think Tyson Foods is a well-established company with a solid track record of success. They've shown that they can navigate challenges and adapt to changing consumer demands.
So it sounds like they're a company worth watching for potential investment.
Definitely. But as with any investment, it's important to do your due diligence, assess your own risk tolerance, and make informed decisions based on your own financial goals.
That's great advice. Well, thanks for joining me today on Investing Talk Podcast. I hope you found this discussion insightful and helpful as you navigate the world of investing.
It was my pleasure. It's always fascinating to take a closer look at companies like Tyson and understand the forces that drive their success.
Absolutely.